Welcome back. As promised, let's get chatting with the management of Dwarikesh Sugar. We have with us Vijay Banka. The company reported a mixed set of numbers for the first quarter. Sales declined due to lower domestic sugar quota, while margins expanded because of higher contribution coming in from the ethanol business as well. Thanks a lot, Mr. Banka, for joining in. That really is the first question. We were looking at your split between sugar and distillery over the last few quarters. Same time last quarter, sugar did 621 crores in revenue, distillery did 93 crores. Now we look at it, distillery is close to 192 odd crores and sugar is sub 500 crores. How much more did you divert towards ethanol, and is that sustainable? What we basically want to get to is what's a sustainable run rate for both your ethanol business and your sugar business going forward in terms of revenue and margins?
Good morning. We had better sales mix this time with ethanol contributing, ethanol's proportion being higher than what it was in the corresponding quarter last year. Well, going forward, we will continue to make efforts to sacrifice sugar production, and we will try and produce more and more ethanol. On a full season basis, we have sacrificed about 1.39 lakh tons of sugar production in favor of ethanol. And that's the trend we expect to we think should be sustainable going forward.
Okay, all right. Mr. Banka, then give us a couple of details on the ethanol side of things. What is the volume number you should be ending this year with? And give us a comparative number as well for FY23. And also this profit number, the margin number of around 20%, is it sustainable?
Yeah, of course, on full year basis, the margin of 20% is sustainable because it will have a mix of both ethanol made out of sugarcane juice directly as well as from B-heavy molasses. While the margin is lesser in case of ethanol made from sugarcane juice, it's much better in case of ethanol made from B-heavy molasses. So we should, on a full year basis, we should be able to produce and sell about 11 crore liters of ethanol. Last fiscal, we did about 8.5 crores, 8.42 crores to be precise. That was because our second distillery got operational sometime in July 2022. So the full July 2022, yes. So the full benefit was not available in the last fiscal. Going forward, we will have the full benefit.
So what exactly does your overall annual capacity stand at right now? What is the capex that you've lined up in ethanol going forward? What's the long-term target here?
See, our annual capacity to produce and sell ethanol is about 11 crore liters. We are now fully integrated. We are fully integrated. We don't have to depend on outside molasses, and at the same time, we don't have molasses to be spared for sale outside, apart from whatever that we are required to give as far as our country liquor obligations are concerned. Going forward, we will try and enhance our sugarcane crush rate. And we have some inbuilt cushion in our ethanol capacity as well. So first thing first, we will have to improve our crush rate, and then we will also try and improve our ethanol production run rate as well.
So what does it all mean, boil down to, in terms of revenue potential as well as margin potential going forward? If you are backward integrated entirely and you are increasing your efficiencies, this year you'll do about 11 crore without any capex coming in. How much can you increase that to, say, next year? And how much more are the margin efficiencies possible there?
See, as I said, we are fully integrated. We don't have, so our focus, our future program is to sweat our existing assets fully. So we have, in this particular season, we have had 6% more sugarcane crushing done. So we will try and do more sugarcane crushing in the coming season as well. We are trying to, within the same capacities, we are trying to crush more by ensuring that we get more cane from our command areas. And we will simultaneously also work on improving the production run rate so far as the distilleries are concerned.
All right. Mr. Banka, on the weighing scale, currently, you're clearly tilting towards distillery in comparison to sugar. But if sugar prices hold above this 37 rupees per kg, then will they tilt the scale a little bit in favor of sugar?
You see, our plant has flexibility. We can always do those subtle adjustments so as to produce more sugar. But having said that, I must say that our focus is on on producing more ethanol, because even at the price of 37 rupees a kg, the ethanol seems more remunerative at this point in time.
What's the current differential between, a comparable differential between ethanol and sugar, say per kg basis?
See, insofar as ethanol is concerned, the given prices of today, it equates to about 37 rupees kg of sugar sales price. So, and ethanol price, we expect that to get better in the coming times, whereas we have seen sugar prices to be fairly flattish in the last, at least 2022-23 was very flattish. Of course, the prices have gotten a little better from April onwards.
Right.
Yes.
Okay, Mr. Banka, we appreciate you stopping by. A short but effective chat. Thanks so much for joining in. For the time being, though, we'll have to slip into a short break, come back, continue to focus on markets and stock-specific action. Don't go anywhere.